Most Americans are leaving over $100,000 on the table when it comes to Social Security, and they don't even know it. Today I'm going to show you the 5 most common mistakes people make and exactly how to avoid them so you can collect every dollar you've earned. If you are 55 or older and you have not yet claimed Social Security, this video could be one of the most important ones you ever watch. So stay with me through all 5 mistakes because even one of these could change your retirement dramatically. And if you're already watching this channel, you know we break down complex financial topics into plain English. That's exactly what we're going to do right now. Before we dive in, if this kind of straightforward financial content is helpful to you, please take 1 second to hit the like button and subscribe to Economics 1144 right now. Every like helps more people like you find us. Okay, let's get into the 5 mistakes. Mistake number 1, and this is the most common one I see, is claiming Social Security too early. Here's how it works. You can start claiming Social Security as early as age 62, but if you do that, your benefit is permanently reduced by as much as 30% compared to waiting until your full retirement age. Your full retirement age depends on when you were born. For most people watching this video, it's either 66 or 67. And here's the powerful part. If you wait even beyond that, until age 70, your benefit grows by 8% every single year you delay. That difference can add up to over $100,000 over the course of a typical retirement. Now, of course, delaying isn't right for everyone. Your health, your other income sources, and your personal situation all matter. But understanding this trade-off is absolutely critical before you make a decision you can't reverse. Mistake number 2 is failing to coordinate your Social Security strategy with your spouse. And this one catches a lot of couples off guard. If you are married, you and your spouse each have your own Social Security benefit based on your individual work history. But here's what many people don't realize. A lower earning spouse can collect up to 50% of the higher earner's benefit, known as the spousal benefit, even if that amount is higher than their own. And for surviving spouses, it gets even more important. When one spouse passes away, the surviving spouse can step up to the higher of the 2 benefits. That means the higher-earning spouse delaying their claim can protect the survivor for decades. Married couples who coordinate their timing, rather than both claiming at the same time, can often maximize their lifetime household income by tens of thousands of dollars. Mistake number 3 trips up a lot of people who are still working when they claim, and that's the earnings test. If you claim Social Security before your full retirement age and you are still working and earning income, the government will temporarily withhold some of your benefits if your earnings exceed a certain limit. In 2024, that limit was around $22,000 per year. Now here's the good news. Those withheld benefits aren't lost forever. Once you reach full retirement age, your monthly benefit gets recalculated upward to account for the months that were withheld. But the temporary reduction can still cause cash flow problems if you aren't prepared. The takeaway: if you plan to keep working, think very carefully about whether claiming early makes sense. In many cases, waiting is the smarter move. We are halfway through, and we still have 2 more big mistakes to cover. If you haven't already, this is a great time to hit like and subscribe to Economics 1144 so you don't miss our next video. It means the world to this channel. All right, let's keep going. Mistake number 4 surprises almost everyone the first time they hear it. Social Security benefits can be taxable. If your combined income, that's your adjusted gross income plus any non-taxable interest, plus half of your Social Security benefit, exceeds certain thresholds, up to 85% of your Social Security benefit could be subject to federal income tax. For a single filer, that threshold starts at $25,000 per year. For married couples filing jointly, it's $32,000. Many retirees with pension income, IRA withdrawals, or part-time work income find themselves in this situation. This doesn't mean Social Security is a bad deal. Far from it. But it does mean that tax planning before you claim can make a real difference. A financial planner or tax professional can help you structure your income withdrawals to minimize what you owe. Mistake number 5 is one of the easiest to fix, and yet most people never do it. That is not checking your Social Security earnings record for errors. Your Social Security benefit is calculated based on your 35 highest earning years of work. If your employer ever failed to report your income correctly, or if there was a data entry error somewhere along the way, your benefit could be lower than it should be. The Social Security Administration lets you view your complete earnings history online at ssa.gov. I strongly encourage everyone watching this video to create an account there if you haven't already and review your record. Errors are more common than you think, especially for people who change jobs frequently, worked for small businesses, or had self-employment income. Catching a mistake now, before you claim, gives you time to correct it and protect your full benefit. So let's recap what you can do right now to protect your Social Security income. 1. Know your full retirement age and understand the cost of claiming early. 2. If you're married, coordinate your claiming strategy with your spouse. 3. If you're still working, understand how the earnings test could affect your benefits. 4. Work with a tax professional to plan for potential taxes on your benefits. 5. Go to ssa.gov today, create your account, and check your earnings record for errors. Social Security is one of the most valuable financial assets you have. You paid into it your entire working life. Taking the time to understand these rules and to make a thoughtful, informed decision could mean tens of thousands of dollars more in your pocket over retirement. If this video helped you today, I would love to see you hit that thumbs up button. It helps so many more people just like you find this channel and get the information they need. And please, subscribe to Economics 1144 if you haven't already. Every week, we break down another piece of the retirement and personal finance puzzle in plain, simple language. I'd love to hear from you in the comments. Have you already claimed Social Security, or are you still deciding? Tell me where you are in the process. I read every single comment, and I love hearing your stories. Thank you so much for being here. This is Economics 1144, and I'll see you in the next video.